Hi everyone, Chad Shoop here. Welcome to my latest quick takes video. We're going to run through about 5 stocks today in just a few minutes briefly, because all we're going to look at is the price charts for these companies to figure out whether or not I want to place them on my bank it list, which means I expect them to head higher, or my tank it list, which means look out, they're going to head lower from here. So big shout out today to Ariman, Mike, Jose, everyone who's been writing in, letting me know what stocks you want me to take a look at, to add to my spreadsheets and to put on my radar. So just a big shout out to everyone who continues to comment on these videos, and please do so today. Keep the comments coming. Let me know what stocks you want me to feature in an upcoming either bank it or tank it video or another quick takes video like the one today. I'll do several of these every month, so you got to leave the comments, that way I know the stocks that we want to go through. So continue to share this. Let me know just anything that's on your radar. Again, it could be big large cap stocks like Apple or Microsoft, or relatively unheard of stocks like some of the ones that we're going to be talking about today. So before I get started though, you can scroll below, click subscribe so we don't miss out on any of my upcoming videos. And if you enjoyed the content, just hit the thumbs up to let me know. But keep in mind as we go through these, there's a lot of actionable insights on these price charts and whether or not they're on my bank it list or tank it list. The key levels I watched when we went back and kind of looked at the ones that we've done here over the last year or so, a lot of these stocks continue to follow the patterns that we show you. And when they go turn on my bank it list or my tank it list, we see some big movements there. There was some pretty nice returns where stocks were shooting up 30, 40, 50%, quick double-digit gains that were in the direction that we were looking for. And then some of the ones that were on my tank it list, some of those plunged, but other ones just continue to show weakness, which means that you didn't want to be in them on the long side, so they were good calls as well. So we don't get them all right. That's going to be true no matter what. But for the most part, at least these price patterns that we show you tend to be right. And once we get the breakouts or the breakdowns, or if they hold on into the key levels, it is something to keep on your radar. So let's dive in today. First stock we're going to be taking a look at here is GoPro, where they've really cornered the market here on action-packed video recording, which is a lot harder today with, your phones do a great job, but they still don't capture action like a GoPro, and GoPros make all these attachments where you can strap them to your helmet as you're riding bikes. So that's really their market. And when we look at the price chart here, you can see that it's been trading in this, it's a wedge pattern after this big surge here back in March. Then it crashed and then just continued to bounce around. What I'm looking at is that it's the red means that it's in the lagging quadrant of the relative rotation graph. And you can see just kind of going back to some of these, once they hit the red, that usually means they're going to turn higher. So it's not necessarily a sign of look out below, especially when we have a key support right below it. So this is what we want to keep an eye on here in extreme short term, this area of support, and give it a little wiggle room. Like if it drops down, about like that, down to the low $9, it's okay. You don't have to panic, but just this area, we want to see the stock hold and bounce higher from here and stay in this consolidation before we get a breakout. Now GoPro, when you look back on a chart, consolidation patterns like this, whether they're triangle patterns or wedge patterns, they tend to be continuation patterns because we have the big push higher, and then investors are a little cautious. They slow down. They're going to let the stock consolidate. That's what we're seeing here before we get another big breakout. And then the breakout's still going to be weeks away, so it's not going to be coming right away. So there's time to have this on your radar and to keep an eye on it. But as long as it holds above this green support, this stock's going to be on my bank it list. Look for a GoPro to break out to the upside. Now, our next stock today is UnderArmour. And what I wanted to look at here was, so we had this little wedge pattern. So this is another consolidation pattern where it was bouncing around. Then we had the big breakout. August move was clearly a breakout from this pattern that you can see just the faint trend lines there highlighting that. Had the big breakout. Now I'm expecting to see another consolidation pattern because the rally up to the upside didn't continue. Right? It had a big push higher. We actually traded put options on the stock, collected a nice triple digit gain here on the pullback. It was a great call. And one of the things that I was looking at was this relative rotation graph. Once you see a big surge higher, that throws it into the leading quadrant, which it was in improving, went to leading, then it was overbought basically. I was expecting it to pull back. So we had put options and we nailed it. It was a nice timing trade, just short term, triple digit gain. But now I'm still bullish on the UnderArmour. Overall, I like the stock. I know that the economy is still opening up. They're still rebounding going on, especially in the malls and with retail sales. And as kids are back out in sports and being active again, they're going to need new gear. The growth spurts, everything. This is all playing in the UnderArmour right now as we speak, that people are still buying new gear. So I expect the stock to hold this pattern, just expect some more consolidation, but eventually a breakout to the upside for the stock. So I'm still bullish. You can see that this could last here over the next several months. So We may not get the breakout that's actually going to push it up to $24, $25 a share until we're into 2022. But for now, you follow this green trend line higher, and if we get the breakout to the upside, this is a screaming buy. We want to keep UnderArmour on our bankit list for today. Now, our next stock is going to be Vertex Pharmaceuticals. So it's a pharmaceutical company, and it's an interesting price chart here. We have another falling wedge pattern. So we just saw this on UnderArmour. It was a price pattern right before they got the August surge. And I just wanted to point that out because this is a bearish pattern. We're falling, declining lower, but you can see that the price moves are getting smaller and smaller. More consolidation is coming into play, and that can mean a turnaround where we get a breakout to the upside, and then all of a sudden the trend reverses. So it is something that we want to keep in mind, even though the stock's been getting crushed down about 35% here from the top down to where we're trading at today. So it's been through a massive crash. Can it turn around and head higher here? There's a chance. And I'm actually, because of what we just saw in UnderArmour, I'm actually going to put the stock on my bankit list, even though, look, it's on my bankit list, but my key level to watch is going to be this previous low right here. So around $185 a share, I'll give it. That's what I wanted to see it stay above. So this is a very short-term stock that I wanted to watch, keep on my bankit list, at least in the short term. If it goes below 185, then I don't want to mess around with this going out even any further, and then the breakout going one way or the other. So above 185, I'll be bullish. Below 185, I'll be bearish. With the stock, as we're looking at right now, it is around 189, almost 190. So it's going to be on my bankit list for now. This is one that we could flip-flop here in the coming weeks, just depending on where it goes. But for now, Vertex will be on my bankit list. Keep an eye on it to break out to the upside here and start climbing back up to 240, 250 a share in the weeks ahead. Now, our next stock, OLED, a Universal Display Corp, OLED. This is another wedge pattern. So I love these key price levels that we highlight. We have the red resistance, the green support, and this one's trading beautifully inside this pattern, bouncing around. And we're kind of at the low end of this consolidation. So right now, Universal Display Corp going to be on my bankit list. Once again, we go back to what these patterns are really telling us, and it's the fact that there's some uncertainty in the market and there's consolidation in the market. So when we look at the chart over the last few years, it's definitely in a rising trend. It's a bull market for Universal Display Corp. Now, as it had this big push higher and been big correction, this set off the uncertainty, the consolidation that we're seeing. And then what this means is as it goes up, people are selling sooner instead of letting it run. And then as it comes down, people are buying earlier instead of letting it drop back down to here. So we got buyers coming in, but then people willing to sell. So you have this kind of uncertain period where it's bouncing around, and then boom, a breakout will occur. So we're going to keep an eye on this one. I want it on my bankit list as long as it holds this price pattern. If it breaks below this channel, then look out below. It's going to fall, quickly down to the low 100s per share. But if we get a breakout, it could be testing $300 per share early in 2022. So bankit list for now. Keep an eye on it. We want to watch these key levels here over the next several weeks. And right now, you see that's at the bottom. It's in the improving quadrant. So if this can, depending on where it's at, if we can just hold this level and then start to trend higher, it'll be back up near the top of this price channel in a week or two and teasing a breakout on for Universal Display Corp. Now, our last stock, Outset Medical. So this one is the last one we're looking at today. It's just our fifth stock. And it recently became public. So it went public back in September 2020. So just a year of price patterns here. This is going to be the only stock on my bankit list for today. And while the price chart's not that alarming, what is alarming is so what I like to see after an IPO is regardless of where it closes out on the first day. So regardless of where they price their IPO and that sort of thing, I want to see it trend higher early on. I want to see investors stay bullish, stay hungry about the stock. We didn't see that here. We saw it dip. That showed us that there was some weakness. And since then, we've just seen some choppy back and forth. And that's not very bullish to me. It's been a year. Investors still don't know how to treat this stock, and it's trading basically where it closed here after the IPO. It's right around the same levels. And now we're at the top of this kind of declining price channel, and it's in the leading quadrant. So everything's stacking up that I expect this to head back down towards $30 a share over the next few weeks, really. So this is going to be on my bankit list for now. But again, these are key levels to watch. If it pushes back up towards $60 a share, then it's going to be on my bankit list. Expect more volatility. But at that point, I think that it'll push up to new all-time highs for the stock, even though it's only been trading for a little while. It'll be bullish to see that. So Again, keep these things on your radar. For now, it's a tank it stock, and I'm expecting it to head down to the 30s. But the key levels are what you want to watch. That's why I do these quick take videos. It's not just to to try to be right on every call that I make when we take a look at the stock, because as I talk about a lot today, these things are going to fluctuate just from day to day, from week to week. The key levels are going to be tested. New trends are going to form if this thing stays within, just for like Outset Medical, if it stays within the declining price channel for a while, it's going to have a period of consolidation where eventually it'll create a short-term breakout within the same declining price channel, and all those things will start to factor in. So it's always evolving. There's always new price channels, price levels that you want to keep on your radar. But that's why I want you all to keep commenting on stocks that you want me to take a look at. UnderArmour has been one that we talked about before. And every time I pull it up, after a few weeks, the price chart's going to look different. It's going to tell me different things, whether I was right before or wrong before. That really doesn't even bother me. What bothers me is just looking at what to expect going forward, what key levels to watch. And we know those today for these 5 stocks. So you know how to keep an eye on these. You know where they fall on my bank it or tank it list. And from there, you can take and keep an eye on them on your own and trade them as you please. So that's all for my video today. Again, if you liked it, click the thumbs up and be sure to leave me a comment about any stocks that you want me to feature in an upcoming video. And always don't forget to subscribe. That's how you'll get to stay up to date with my latest insights that we post throughout the month. So until next time, I'm Chad Shoup.